Good morning and welcome everyone to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. Well, the aviation sector is in focus this morning for some good news and some bad news, Santo. I mean, the good news is that finally the government has removed the caps on air ticket fares fully after they were introduced during the pandemic, of course. And
so who is this good news for?
this is the good news for, yeah, exactly. I mean, I
Are you a consumer here?
I was getting into that part.
For the company?
Yes, exactly. I was getting into that part. Now, if you look at it from the company's perspective, of course, it's a great news. Now they will be able to pass on some of the increase in costs that they have seen, especially on fuel costs. We all know that jet fuel prices have been surging over the past 1.5 years, and they have not been fully able to pass it on. But now they will be able to do that quite efficiently. But the flip side is, if you're a consumer, then this is very bad news for you.
I know you've been complaining about rising airfares for quite some time and having...
And Santo, my concerns now probably would get even more, because now the fact that is that now that the cap is no longer existent, any sort of fluctuation or violent fluctuation in jet fuel prices could result in similar fluctuation in air ticket. And right now the notion is that clearly air ticket prices are going to surge going ahead, and that could overall have an impact on demand per se. Already ticket prices, if you look at domestic ticket prices in some of the busiest sectors such as Bombay to Delhi, Delhi to Bombay, tickets have already surged almost 60%, and it will not be surprising if by the end of this year this is almost 100% from January. So clearly demand will now become a major issue, Santo, going ahead.
Well, here's the positive side of it, CJ. Maybe you should look at the brighter side of things also. If you look at airline pricing, more or less, ultimately it's a function of how much the market will bear, and airlines also realize that. They must have already seen that when prices increase, obviously there is a corresponding fall in traffic as well. We saw some bit of it in July. Now that said, you yourself been pointing out repeatedly that there is intense competition. Intense competitions basically means that companies, while technically they can price fares as they like, they won't be in a position to do, because someone is obviously going to undercut them. And this has been the feature of the aviation industry for many years now, which has always led to companies not probably making as much profits as they should be. So it's not all bad news there, CJ, if you're looking at it as a consumer.
This is a sort of good bad news, because if you're a consumer, yes, air tickets probably may not rise as much as one is fearing, but if you're an investor, then you know that profitability is not going anywhere. That means losses, even in Interglobe, which reported losses for the June quarter, probably the best quarter we have seen for travel services ever in recent history. Even in a quarter like that, the company was reporting a consolidated net loss. So clearly that situation may not improve.
Yeah, but another way to look at it again, you're seeing a pickup in corporate travel very clearly. And corporate travel is what brings in the bread and butter for aviation companies. That has seen a decent uptick. Of course, because of rising fuel prices, ticket prices have gone up, and to some extent leisure travel may get affected by that. But corporate travel clearly is on the pickup, and I think that should provide a good cushion. Already in the June quarter numbers, you saw, despite Indigo reporting losses, the internals of the performance were quite good. In fact, yields had risen. So it's not all bleak for aviation companies at this point in time. It's not a very rosy picture either, but definitely nothing to be very gloomy
I think, Santo, after the sort of rally that we have seen over the past 1 year in many of the aviation stocks, I just feel that going ahead, the valuation multiples, which had seen a re-rating because you're emerging out of the pandemic, there was a lot of pent-up demand, that valuation multiples probably will see downgrades going ahead, because A, demand comes into question now, and secondly, as you mentioned earlier, of course, margins could remain an issue. If they do not pass it on fully, then of course they take a dent on margin, plus the entire issue around the increase in competition with Akasa Air coming in, Jet Airways coming back, although there is one candidate that probably looks like very wobbly, and we will touch upon that later in the show. But let's now quickly look at how the market is setting up for the rest of the day, and clearly it's looking quite weak. We are supposed to be catching up to some of the the action yesterday, because Indian markets were shut yesterday on account of Ganesh Chaturthi. So clearly the XDX Nifty 50 is indicating a very weak start for our market. Wall Street, the handover from Wall Street also was quite weak. If you look at US stocks, they have been struggling ever since that Friday speech of US Fed Chief, Jerome Powell. And At home, the Q1 GDP data came out yesterday, and that was also a little underwhelming, Santo. I mean,
Very
although
clearly,
if
it
you look
was.
at the headline numbers, 13.5% growth almost on a year-on-year basis in the June quarter. But if you look at it, compare it to the estimates were around 15.5%. So clearly, there is a little bit of weakness from there as well.
Yes, there is. In fact, now many analysts and economists are wondering if the RBI's projection of 7.2% growth for this year, that may have to be revised down lower. Already some brokerages have already started trimming their estimates, and the commentary doesn't seem to be all that cheery out there. The government has defended its the numbers. It has said that it's pretty much on course to meet whatever the guidance that it had given at the start of the year.
8.5%, if I'm not wrong.
Yes, but
which seems a little incredibly
which
ambitious.
is very aggressive. 8%, but
8% is it? Okay.
Roughly, I think that is the. But at the same time, the market doesn't seem to be very confident
about that. Do you really think the market really cares at this point of time? I think the market is in a different tangent. We have again reached those levels of the second wave when the reality and markets were totally in parallel trajectory.
Well, CJ, here's the thing. Market, when liquidity is strong, it tends to believe that liquidity is the cure for everything. Just because you keep pumping in money, probably stock prices will keep going up, and that's the end of the matter. But it doesn't work like that. If there is weakness in the economy at some point in time, it will start showing up in the corporate earnings. And already, as we know, corporate earnings broadly, there is some bit of softness there. And if you look at the GDP numbers also, manufacturing particularly seems to be in a weak spot at this moment. There are some positives though, but on the whole, clearly the picture is not as robust as the stock market would like you to believe. But there again, CJ might say that, well, market is discounting the future. It's not looking at the near term GDP growth. It's probably looking at FY24, where the numbers will be much stronger.
Santo, also in markets, it's always all relative, right? I mean, if you have to look at India's growth compared to what is happening globally, and clearly the picture then suddenly looks much better. It's like how you say you have recency bias, right? In the US, June inflation was 9.1. In August, it might be around less than 8. So suddenly, inflation is no longer a problem, even though it has only gone from 9. It's not that prices are not increasing anymore.
Yeah, they're staying high.
So that is the psychology of the investor, right?
Well, that said, let's quickly dive into the stocks for the day, starting with Karur Vysya Bank. CJ, here's an interesting nugget about Karur Vysya Bank. Not many people know that while Titan was the stock that made most money for Rakesh Jhunjhunwala, the legendary investor who passed away last month, however, he always mentioned that Karur Vysya Bank was the stock with which he felt emotionally attached. That's one of the reasons for that. Is also, even when he was a trader back in the 90s, he had started building up positions in the stock, and this is one stock where he's never really trimmed his position. Even now, close to about 4.5% is now probably held by his trust at this point in time. Now the stock has hit a 3-year high. It had been facing a lot of problems. The bank had been going through quite a bit till about last year, but now most of those problems now seem to be behind. The most important thing is that the bank has now guided for negative slippages, which means that it is hopeful of better recoveries, mainly in its retail, agri and SME businesses. The CASA ratio, which had fallen to as low as about 22%, 20 odd percent back in 2015, that has now increased to about 36%. That's fairly
very good
a significant improvement there. Also, one of the reasons for the bank's numbers falling off sharply was it was trying to cut back on its corporate loans, but now it's slowly getting back into that segment. Management has guided for a 15% credit growth this year, which is a fairly respectable number, and maybe market confidence seems to be showing in the way the stock price has reacted. Sharp up move there over the last 1 month, and as I said, the stock is now at a 3-year high. According to brokerage house MK, the bank is set to report a ROA, a return on assets, of more than 1% after a gap of almost 9 years, and also valuations at this point in time, 0.5 times adjusted book value for FY24 is pretty reasonable.
Well, Santo, that is a very, very strong case that you have made for Karur Vysya Bank. But clearly, of course, fundamentally, things are looking very, very rosy. But I just feel, Santo, if you look at the stock, on the technical charts, there also, I mean, technically, it looks like a very, very strong structural bull trend that has started in the stock almost 3.5 months ago. But remember, it's been a 50% rally, one-way move. 50% one-way move. And generally, with such a big rally happening in such a very condensed space of time, profit bookings and pullbacks are part of the journey for a lot of the stocks. At this point of time, it is very, very likely that the stock is currently sitting at a precipice where the biggest resistance is around that 72 mark, and if the stock is not able to cross that mark, I think you would expect some bit of pullback, probably towards the 66.5, 67 range on the stock, which is the immediate support for the counter at this point of time. So I would be a little wary of going gung-ho at this point of time. Maybe just wait for that initial pullback to come in, and maybe then you could probably deploy your capital, because at this point of time, fundamentally, the stock looks quite strong. Well, the next stock, and I touched upon this in our opening segment, is from the aviation sector, and this is SpiceJet. Well, things are not looking good for SpiceJet at this point of time. It seems like it needs another turnaround story almost a decade after it actually had one turnaround story. At this point of time, the company's financials, a lot of the activities that is happening are not looking very, very rosy. If the company's CFO, the Chief Financial Officer, has resigned after announcing the June quarter results yesterday. Look at the losses for the year, for the quarter, around 786 crore, if I'm not wrong, for the June quarter in terms of net loss. So clearly, financials are suffering, because the company's argument is that it's driven by the higher or the surge in jet fuel prices for the past 1 year. So clearly, financially, things are not looking well. Market share wise, things are not looking well, and of course, key personnels are leaving the company at this point of time. And lastly, even on technical indicators, almost all momentum indicators are indicating a bearish signal on the stock. So clearly, things are not going great, Santo, for SpiceJet.
No doubt about that, CJ. Clearly, the weakest in the aviation space at this point in time, SpiceJet. But the only thing, if I were to look at the price action, the market seems to be hopeful that this time too, the company will be able to survive.
They are in for raising some funds, yes. I think, if I'm not wrong. So
a lot depends on that, whether they'll be able to raise that funds in time, because if you remember, both Kingfisher Airlines and Jet Air, they were frantically at the last moment, they tried to raise capital from foreign companies, but the permission never came through, and that's what eventually led to the
Santo, it's such a weird story, given that, back in 2019 when Jet Airways was getting out of the market, everybody was so gung-ho that SpiceJet probably would take its place, in the sense that a lot of the market share that Jet Airways had, especially in domestic travel, will then go to SpiceJet. But 3 years down the line, it has all gone wrong in terms of strategy, trying to focus in low density flight routes, not going for high density flight routes. A lot of these issues have plagued the management. Clearly, the company has not been paying salaries to its staff, at least all of the salaries to its staff. So a lot to ponder for investors who are invested in SpiceJet at this point of time.
Well, Tata Metaliks, the next stock. CJ, the stock had taken a pounding after its first quarter numbers, and understandably so. Quite a few things, increasing raw material prices, mainly that is coking coal, and at the same time quickly followed by the export duties on pig iron. So these two factors had really hit the company hard, but of late again investors appear to be warming up to the stock. It has climbed to a 3-month high now. Now what's the story here? The pig iron part of the business, that is where much of the pressure is, but at the same time the company is also into ductile iron pipes, and that is where things seem to be slowly improving. In fact, most of the contracts, the new contracts that it has bid for, the pricing is much better than the rates at which it had bid earlier. So it is the value added side of the business which is now going to be the main driver. It has the company has also commissioned a lot of facilities which will be going on stream shortly. Earnings from that is expected to give at least some comfort to the margin profile, which right now is getting hurt by rising prices on both coking coal as well as the weakness in pig iron prices. So this is a story where of market probably trying to re-rate the stock based on its changing product profile, and given that the government is committed to supplying potable water supply to every household, clearly Tata Metaliks seem to be best poised to benefit from this.
Well, Santo, clearly, if you if you look at the fundamentals prior to the past 1 month, where the stock has rallied almost 11%, clearly things were not looking that great, and I somehow get a feeling that this is more a tactical play. But overall, if you look at some of the key momentum indicators, the stock does appear to be overbought, especially on the MFI and RSI indicator, and there's possibility that some pullback may be in the offer.
Well, with that, the market has opened deep cut 250 points down on the Nifty, and market breadth negative but still not pretty bad there. 850 stocks up, 1170 stocks down on the Nifty. Nifty Bank is down by a little over 1%. Nifty Mid Cap down by close to 1%.
I think Santo, you have to again, tip your hat to the smaller mid cap space. Clearly, where the Nifty is down almost 1.5%, the Nifty small cap index is actually down about 0.4%, and Nifty mid cap about 0.7%. So clearly, the reason the breadth is not that bad is because the small and mid cap space are doing quite well. If you look at sectorally, clearly banks have taken it on the chin, down about 1.9% almost. Nifty Auto is down. All sectoral indices currently are in the red, and even the India VIX. I mean, if I can just check the India VIX right now, even that index at this point of time is not looking great. The India VIX is down about 5.5%, about 2.5%. I beg your pardon. So clearly, seems like a market which is a little uncertain as to where it is headed after that rally on Tuesday, which was a mega rally in that sense.
Definitely, it seems to have given up most of the gains now.
Clearly. Let's see. Let's hope that we don't give up entirety of the gains on Tuesday. But interesting to watch how the day progresses for the market. Last stock on our radar today is Tejas Networks. Now, this is mostly a technical pick, Santo, because fundamentally the company had been facing a few challenges in the past two quarters, especially on the demand side as well as on the margin front. But if you look at the Q1 performance, yes, losses had narrowed. Recently, after the company's earnings came out, a very interesting announcement came out in the interview that the company's management had given to CNBC, wherein they indicated that they want to foray into chip making business. Let's not forget that the government is also trying to boost semiconductor production at home because of the global issues that the supply chains are facing in Taiwan, in China, and places like that. Now, if you look at a technical, Santo, clearly this was a stock that was in a consolidation zone for a very, very long time, and now it has given a breakout not only on the daily charts but also on the monthly charts. So that is really exciting. A lot of technical analysts out there. Swastika InvestSmart came out with a buy call on the stock for the next 2 to 3 weeks, and they expect almost a 21% upside. So if you're looking for a tactical bet on the market at this point of time, probably Tejas Network would be something to keep on your watch list.
Well, since you've mentioned tactical there, I have nothing much to add. Clearly, the fundamental side of the story is not looking great at all. Last 5 years, minus 15% compounded growth, or rather, it's minus 15% degrowth actually in top line. And in the last 3 quarters, the company has been continuously making losses at the profit after tax level also. If you compare it with many of the other companies in the space, if you let's say a Bharat Electronics or Hindustan Aeronautics, those have rallied on the back of a significant and sustained improvement in their top line, whereas in the case of Tejas Networks, clearly that seems to be missing. The only one good part I would say is it has managed to reduce its debt considerably. That is one good thing that it has done, and if it's able to execute the order well and if the plans go well, then it's a different story altogether. But at this point in time, I wouldn't just touch it, CJ.
Cool. Santo, let's wrap it up then.
Yes, it's a wrap, and thank you for watching. Please do share your feedback on the show in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.